Well, let's circle back and start talking about those soybeans. The beans have been an interesting product as well. I mean, all the row crops and proteins have been interesting this year, considering about where we've come. But let's talk about beans for a second. No new crop beans. Overnight, we had a 20-cent range. It looks like we've added a few cents to that, but that's the world we're going to be living in now. So you're going to have to kind of get used to that. I would say that the trend still remains bullish if you just kind of take a look at the chart. But I think that the yellow flags come in for me around the fact that it's pretty steep, and stuff that goes up that fast, you kind of want it to kind of catch its breath and do a little backfilling, and that would make that move a little bit healthier. So keep that in mind. It's a young trend line moving ahead, and if we test some support on that young trend line, I think that'll be the first test of the people that are already long this contract if they don't bail at that level, right? Because so you're going to see, maybe if we see some weak longs bail there, that kind of turns this chart over and makes it look a little bit more to the downside. But right now, it does look good. It's just gone up fast. We've got a young trend line, coming in there, and so that'll be, if we do go back and test that trend line, that'll be the first test for the weak longs and whether they want to bail at that level or not. And I think that's something psychologically that could be significant. Another thing that's fairly significant is this morning I checked open interest, and it had jumped in soybeans. It's a record high, and it's up about 5,500 contracts. So we're attracting new business to the product, and that's good. And so hopefully that continues, and then we can see that in the charts here, because we know what we got from the USDA. We've got all the fundamental news in front of us. Now we're kind of looking at some of this technical stuff, and the technical things are lining up, which is nice, with the fundamental news. So those two things going in the right direction keeps these charts going in the right direction, which is lower left to the upper right. We just don't like to see it go too fast. So that means, because you kind of leave people behind, and then it kind of melts down faster than you'd like to. So just keep all that in mind. That's just after 32 years of experience. But, open interest, higher record, and we're going to be volatile. Those are the first two things I'd like to talk about. The last thing, obviously, is you got to just be aware of the downside, the trend line below. It comes into play around 1032. Keep that in mind as a potential target for those technicians, right? So if the market does roll over, you're going to have that line that up and know that would be a level for some battle, right? Because I talk about higher volume at those levels. That's because there's going to be people defending them, and there's going to be people that try to attack them. And so that's why you see the higher volumes, because that could be interesting. So yeah, do we have some things to talk about to the downside? This is not a one-way market, but so for the bulls, we've got some stuff to chew on. For the bears, we've got some stuff to chew on, and just kind of keep an eye on both of those, and that'll give you a little bit of a quick roadmap as we kind of close out the week tomorrow.